Well, hello, folks. Top Gun here with you, and I got a good one for you. I'm actually excited, just a little bit moderate, where I'm like, okay. I gotta share it with you guys. I gotta share it. It's exciting, just a little bit, considering it's been such a huge, long bear market. Like a little blossom, a little spring is just all it takes. Even if there's another bout of snow coming, even if it's not actually the end of winter, just an early spring, still a rally, that could be exciting. What's going on? What's going on? So, Bitcoin, right here. This big, long trend of resistance has been broken. This next month period line of resistance is being toyed with. Now, however, I should say, with some clarification here, that when I bring this chart out like this and I put it on the button I should, log like hex, and yeah, it changes the lines. So the short term one still being tested even on log, but there's an even longer one on log that may make it just a little bit longer until it gets tested. Yeah, when we come across the tops of these, still a ways off if we use log. But it brings us into a zone where, hey, this big line of resistance that's been messing with us all year in crypto, the bear market trend, the trend is your friend until the end. But where is the end? I've been saying that, and I'm not even 100% sure it's going to go down right away. We might have a winter rally, some room to move up against the logarithmic version of this before it comes down, and then maybe makes all-time lows. But the point is, crypto season seems to be changing, because also, let's go have a look at Hex. Let's get right in there. Well, let's do this, because if you want to go back and watch my clips, when I called the June bottom here, I said it would move sideways in this range. On my last video, I deleted the lower line, and then I've changed the color of the other one. So I think we moved the bottom up here, where this is the two ranges where I don't think we'll really see. That's my emergency, like all hell breaks loose ranges. Cent and a half, I don't think we're getting there. This is the absolute worst I think will happen. 2.2 from here. I'm seeing some more interesting action, so time to zoom in. Yeah, what's going on here? Let's have a look into the hourly. Boom. Maybe that's too much zoom. Condense that a little bit. But we've got the blue, the long blue one. That's the long standing, still bull trend on Hex in the non-log. And this is our short-term bull trend happening right now that we're a little bit hopeful for, as Bitcoin's being hopeful and testing around with this point of resistance. Ooh, on a Sunday too. Nothing happens on a Sunday in crypto for the last year. That to me is exciting. This is a lot of green across the board in the crypto for a Sunday, for me looking at the different assets. And also I called out this little bull flag here in IM, and then we had some action actually pop off. Volume picked up in here. Oh gee golly, we've actually had some positive price action. Like that's awesome. They added more volume, or more liquidity. Yeah, more liquidity to the liquidity pools on the DEX. All right, and we're still getting copies of this on Ethereum and Pulse chain. So whatever it's worth, I'm pretty sure the price floor is around $50 per billion for IM. Like, awesome. So I've been having fun accumulating and watching that. Like, all right, the charts are changing. And we can still see some dips. Crypto is volatile as heck. I could be wrong about these price floors and this excitement. That's why I do not give financial advice. I get my information from fortune cookies. Do not hit like. Do not hit subscribe. So, yeah. Um, Risky as heck, but I'm actually starting to go in the positive. However, I was like, I think Wait found a price bottom that was there. And then of course, oh, it had to drive it down a little bit. Like, thanks, guys. So maybe it's got lower to go, but people maybe realizing pulse chain's getting closer. They're claiming more and still dumping it. They don't care if anything's being built on it. Like what's going on with a meme coin, one that I'm like, I would not buy, but it was safe to claim for free, so I did. I've been eating my popcorn the whole time as people bashed it, going, what a healthy chart you have there. All the better to get you in with. Must be a pump and dump. Well, aren't they supposed to just pump it and dump it? Why is it pumping again? Why are they building more on it? Why did they provide an actual seemingly fair amount of liquidity for the small project that it is? Why was it targeted fairly towards Hex stakeholders? Like, all in all, I've just regularly been impressed by what should be a crap meme coin. And it's not the coin itself, but the people around the project that don't dox themselves. The work, the coding, just seems good. There's a sense of humor, and they're not heavily shilling it. It's not like, yeah, come by, it's going to change your life. It's like, no, it's fun to play with. You want to come play? Here it is. Okay. Alright. So, I'm still not buying any, but thank you for my free claim. It's interesting to watch this go. It's nice to have my portfolio not entirely on fire while I'm waiting for Hex to get me back into clearance on positives, because my DCA, I don't need this to go very high for me to be broken even. So we're getting there. Crypto spring feels like it's here. So there's room for some rallies, I think, over the winter. We'll see how it goes, because everything seems so crazy. It's the end of the world. So that's the bull's case. I regularly go over and talk about what's happening with inflation, what's happening with the Federal Reserve. The interest rates are killing the bond market. This is a bond market crash. A bond market crash is the end of the world. It's the end of the world because bonds are traded for treasuries. The Federal Reserve buys bonds and issues. Then you can take the treasury notes and put them in a bank for cash. So if the bond market's crashing what the value of cash is tied to, that's not good, because the Federal Reserve is backed by bonds, and banks are backed by the Federal Reserve and bonds. So if the bond market crashes, that's the end of the world. How is that the bull's argument? Because 2008, no one saw it coming when the Federal Reserve bailed out the banks. No one. And creative accounting this time might come from the treasuries, since everyone's wise on QE. They'll have to keep those interest rates up, maybe pause them, but hike them a little bit still in November. This is This is a theory, a possible world. I'm speculating. This is probably not what's going to happen. So maybe interest rates are going up 75 basis points to 50. They might even pull back, but they might still want the shock and awe. So they might do that for November and then hold through December. Maybe even hold at the beginning of Q1, while the Treasury Department goes ahead and buys back 20-year bonds, juggling some money, borrowing from Peter to pay Paul, because they can't create money, not without the help of the Fed, and the Fed's not doing the QE. So Treasury does have access to money, so jiggle its books around, buy up some 20-year bonds, and then it could reissue debt to pay for the debt it bought and repay the juggling it does. But theoretically, it could even wait a few months to do this reissuing and reissue 30-year bonds. This would still create more debt, but it would look like less debt, and it would create more money in the system, stabilize the bond market, and appear like QE without actually being quantitative easing. And the best part of this is, at this point, if they can put off releasing the new bonds long enough, the Fed can start lowering interest rates as they're releasing the 30-year bonds to actually pay for the 20-year bonds they bought earlier. And they can do a little bit of jury rigging to kick the can further down the road. And, also, even if it's not directly happening now, the conditions, like, the hourly in bonds, almost, I think we want the weekly to show how oversold we're getting. Now, it can stay oversold for a while, but this is pretty drastic. The bond market doesn't usually crash. Like, this is 2008, and this is, there you got it, 2020. And both of these stepped in and had corrections. Bonds are crashing again. So, but there was a rally in bonds, even in this crash, we can see. Back in June, the June bottom, we started having a rally in bonds. Everything has been so oversold for a while. Everyone's so confident on things going down. It would be interesting if a rally happened very soon. And I learned an interesting case. Thank you to Michael A. Guyard? I'm trying to say that right. I was butchering his name before. Learned some interesting things about him, from him as well. This is lumber prices we're looking at here. And lumber has some interesting flags, especially when you combine it with gold, apparently, as indicators. So let's go ahead and add gold to our index here. And instead of weekly, let's do this in daily. That's the term I think we want. So generally, with lumber, what you're looking for is lumber going up, which we have. Lumber and gold were going up together, and then gold started going down, but lumber's going up. If lumber's going up, houses are being built. The economy is actually doing a bit of booming. Lumber's not a very speculative asset, so lumber is treated actually as needed. It could be argued that it might be one of the purest indicators. So apparently lumber is an excellent lead indicator, especially when it's trading opposite to gold. So this is starting to go up. That happened before. So I think I need to zoom back to the June bottom, back test some evidence. Let's see how this was reacting. July, June. All right. So 13th through the 22nd. So we started having a rally in lumber before the June bottom actually happened. Only a bit of an indicator before we went back to the downtrend, and it took a little while for the market to catch up to that because it was so exacerbated for a rally. So could we have a major exacerbation rally because all the bulls feel so beat up by the bears as we have a lead indicator from lumber? This could be wrong, but this is the indicators that, okay, I can look at in tandem with not just copper, which, look at that surge in copper. That's interesting. Copper and gold? Is that what I have on here? Yeah. Look at them trade similarly. I love the comparisons. But okay, we can ditch that. So, copper and gold. Interesting. Going up the last couple of days. But yeah, looking at lumber, definitely having a bit of a rally so far this whole month. So could it be, looking at some of these indicators, this could be early, but the NASDAQ is fighting here. Came down harder than the other bottom, but she's fighting for some uptrend. I could mark that, but we might have even broken out of it. Let's see. Dow Jones. Starting to say there's room for a rally there in the Dow Jones. And the dollar index is finally struggling. We might have finally capped out for a bit. might have to come back down and test this yellow line, give a little relief to the markets before it can pick up and start terrorizing again. So we may still be looking at a bottom all the way into March. Who knows with this craziness, but a rally is a bit exciting. And the decorrelation that's starting to happen with Hex is very, very exciting, because Hex and Hedron are correlating for Bitcoin, which is still tied to Grayscale and the SPX. But if there's room for a rally in crypto spring, we could see a rally in Bitcoin and a rally in everything else before we get another crash if, let's say, that juggling's not as successful as I'm hoping, or they don't get to it as quickly as I'm thinking they need to, because the Treasury does have to break laws in order to do this suggested plan. However, basically they're sussing out and asking other banks and investment firms how they would feel about a bond buyback program from the Treasury. And of course, they were excited about this idea. Could be why we've seen some alternate action in the markets. And of course, I love keeping an eye on big tech, the risk on assets. Here's Apple. Ooh, breaking that line, indicating, yeah, even if there's more pain, it's getting unsafe to hold shorts. If you're holding from up there, that's petties in front of paint chains. The rally shouldn't go higher, but I did not think this rally could make it this high. I thought it should have died here. And then I called BS like down here a week early, and I was like, oh, eat pie. Like, oh, it is what it is. Tesla, ooh, nicely falling apart. Nicely, but still, is it nicely falling apart? Ooh, finally making a new bottom below the June. I think Tesla's got more pain. And then funny enough, look at Netflix. I've said for a while it may be maximum pain. Maybe it'll take more hit. Like, it's going up high enough that if there's another leg down after this rally, okay, maybe it comes back down to this line. Maybe we don't even go back down to its bottom. I don't know. But money seems to be flowing back, and they like what Netflix is doing. But then we got Schmuckers. Now, oof. What was this? That May. Interesting. That went down and then rallied, but hasn't come down. Like, oh, Smuckers trades very differently. I'm not sure if it's finding another local top right now. I don't know. We'll have to see what Schmuckers is up to. Maybe it's not as good an indicator as General Mills. But yeah, I've been keeping food right next to the big tech to kind of keep an eye on recession. So I've got all these indicators. Oil I haven't talked about for a while. Yeah, it broke the trends, basically. Like, okay. So I'm back to looking at the bull trend that through the winter we could see it surge and inflation come back, and that's where the leg down could happen. We could find a bottom in March, because there might be a resurgence there. We'll have to wait and see, because while the bond market is crashing, companies don't know how to price the discount on the bonds. And I should have thought of that. Like, I can't believe I had to listen to Michael to get reminded of that, because I know how to price discounts on bonds. And yes, it's impossible to price those in with discounts. Well, what does that matter? Well, companies raise capital through selling bonds, just like the government. And if you don't know how to price the discount, you can't sell the things. If you can't sell the things, you can't raise capital. You can't raise capital, you can't spend. Economic lockdown. That'll kill inflation and the whole economy. Kill the bond market. It's the end of the world. Things are going to have to change. I'm pretty sure the oligarchy does not want to lose their stranglehold and completely pop the dollar yet. So, poor people tax activated, scooped. They're going to want to do something to shore this up and kick the can down the road. And in the meantime, all the pain that has been affecting crypto seems like it's starting to separate. So we'll see how the crypto rally reacts as opposed to the stock market rally. I'm expecting a much better reaction in the crypto rally. So then when the stocks come around to their nasty crash, maybe the crypto crash won't be so bad. The crypto market will start decorrelating. This is my hope. Still going to be watching closely to see if it's true. But either way, I'm getting bullish crypto spring and over over-exaggerated selling conditions in the market are screaming for a rally, but a rally in certain things like commodities might push inflation again. It's funny how that all works. So, yeah, I'm really getting a better idea of how the different things in the market interact with each other. And finally, I've been talking about this interaction and correlation between all these different things for months. And finally, Michael A. Guyard, I watched his video from October 12th. I tweeted about the thing to go watch it. It's probably nothing. Just sharing what I learned my information from. And he's talking about intermarket analysis, why the different charts impact and his whole strategy. I'm like, no wonder I really like what he's saying. It makes sense, and it fills in some of the gaps in the stuff I've been trying to put together and teach myself over the last few months. Like, I love Twitter for finding these people. Sometimes I still get frustrated, like, I wish I found this sooner. But I guess all things in due time. I'm learning at a great rate. I'm feeling like I'm in the right place at the right time, investing in the right areas. I'm all set up for Pulse Chain. I'm heavily invested into Hex. I have a little side project, and if you don't invest in at least something that you hate, your portfolio is not complete. If you're trying to diversify, if you're really trying to diversify, you should hate at least one part of your portfolio. I hate meme coins. I love my little hash puppies, though, because while everything I love has been crashing down, they've been going, na boo boo, we're going to go up in price, and I get how diversification is supposed to work. So looking at my portfolio, hey, I'm not losing all my money because something's going up. And even in the crypto market, I've had some luck so far. There's still no guarantee that this isn't on the long term a rug pull. They have not doxed themselves. We don't know who they are. They could be pumping the price way up there till there's enough liquidity in they can just yank it all, go, ha ha, got you. We didn't need a sacrifice set. Then again, they might just keep building and surprising us with cool things. I do not know. All I know is the free claim was safe to claim. And since it only cost me a couple bucks in gas to mint my free claim that was automatically worth more and has continued to be worth more, well, that feels really beneficial to my psychology, to my mood, to my portfolio, as opposed to other things that have launched that maybe do the opposite of go up in value. So I've been lucky. I've been pretty lucky. Any of this could change at any time, and this is dump coin. Who knows if what they build on it'll be successful, but it does feel like this is about the price floor. We'll see what happens. Maybe someone will watch this video and go, I'm going to dump more. You can go lower. Who knows? So it's crypto spring, though. Like, even people, are buying the free claim. That just happened. Someone just bought more free claim than I got. Look at that. Someone would have bought my free claim coins off me right there. Yeah. So I love looking at this stuff going, finally, there's some excitement. There's some hope. Still a lot of potential for crash. Still a lot of volatility, but finally breaking free. Finally. Freedom. Breaking free. Oh, we're free. Sorry, the singing. I know your ears are bleeding. I didn't warn you. Please don't sue me. I'm just optimistic. Had to put out a video where that's pretty much it. Nothing huge. One other huge thing I should share. I have to verify. I haven't even figured out how to use this thing properly yet. Here we go. I did not build this. Someone else beat me to it. This is a liquidity and permanent loss calculator for V3. The math seems to check out so far. I haven't had a lot of time to check at it, but there's actually a Uni V3 calculator out there on Twitter that I have to double check because it doesn't look at the numbers the way I look at the numbers. So I'm not entirely sure what's going on here. I would probably break out some other stuff in my math, but I can look at the equations when I have some time and double check its validity, because I might be able to work that into my math. So I got to say very much thank you for putting this out there. And since that's open source to me, I'm going to make anything I build off this open source as well. So there's my excitement for the day. Yeah, other people with impermanent loss calculators, not just me. And this one's doing Uni v3 while I've got a Uni v2 and a Pulse X one, basically. So love it. Absolutely love it. The community's coming together with some stuff. And I've been busy working. There are other mathematicians out there building. Yes! So, yeah. That's my excitement. That's my hopium. A little bit of crypto spring. Still trouble on high. There's a bad... I see a bad moon rising. I see trouble out ahead. Anyway, again, with that singing. That one wasn't so bad. When I do the bassy stuff, I've got a bassy voice. It flows. I can use the force. Use the bassy voice. Force. Luke. No, I'm not going to say it. I'm sure that'll ban copyright infringement or something. Anyway, thanks for tuning in, folks. I appreciate you being here while I be a little optimistic about some BSTA that doesn't really mean anything because it's just reading a bunch of tea leaves. You can't really tell the future from the past, but you can get some indicators and some correlations that can give you some statistical probabilities on how likely it is to actually follow that pattern. Oh, wasn't that a mouthful? Go watch Michael A. Guyard. Yeah. The October 12th thing. Find my Twitter. I don't know. Follow the link at the bottom of the video that I've been posting in the description. Every video for the last however long, month, 2 months since I got the link. Thank you, How to Pulse. I don't shout you guys out often enough. Thank you, Bass God, for the music I use sometimes. And thank you, Nikki Boo Boo, for my aviator jacket, which I will be getting back to wearing. So thanks, guys, for tuning in. Until next time, stay frosty.